Hi, it's ggoernert, Vice President and Senior Investment Advisor at Canaccord Genuity Wealth Management and ggoernert Wealth Management. Now here on the channel where we help you make sense of the financial world, I'm going to be joined today by Canaccord Genuity Technical Analyst, Javed Mirza. Welcome, Javed. How you doing?
I'm doing well. How are you?
Good, good. Hey, why don't we talk about where you see things tactically in the marketplace right now? It's been a good 3 months since we got together. And what are the themes that you're seeing right now?
Well, if you recall, last time when we were getting together, we said we saw this seasonal rally through a period of strength into May, and here we are. It's May 4th, and the market's coming under a bit of pressure. So we recently highlighted that markets were in this sideways consolidation over the last 2 weeks, and that a breakdown out of this consolidation zone would open the door for a test of the 50-day moving averages. So the key takeaway beyond that is, if you recall, just from our higher level technical work, we believe that a 4-year cycle reset is coming in the second half of the year, and we outlined that in our outlook piece. Mm-hmm. So what that means is typically you get a consolidation or correction, typically lasts around 34 weeks with a drawdown of around 15%. That's historically the damage that's been done. So the second half of the year is, I think, going to be choppy. It's going to be volatile. I do think that it's going to be better to be in the more defensive areas of the market, and hopefully, have some positioning where you can just sit back and collect some yield.
Mm-hmm. Interesting. Now, last time we talked a little bit about the major markets. We also talked about the commodity sector too. What's your outlook? Getting a lot of questions from clients about copper. Do you get some questions about other precious metals? What are your thoughts there on how things are setting up, whether constructive or not constructive right now?
Yeah, so if you recall, just from our market cycle model work, once you get into the market peak, that's where the economy is running on all cylinders. And that's where basic materials and energy are typically performing pretty well. And that's exactly what we're seeing. It's what we've been highlighting to our clients since October of last year, that that's the phases that either we're in or heading into. So all of those, to us, suggest we're at the latter stage of the move here. Mm-hmm. So if anything, I'd be tightening my risk control levels. The one area of the market that I do like in resources right here, right now, is gold.
Yeah, interesting. Yeah, I mean, there was a sell-off, I guess, back from October straight through till probably maybe a month or so ago. Any target prices going forward on it? And is that more of a just an inflation risk hedge, or just from a technical point of view, looking forward about how it's underperformed or where it's at with the market right now?
It's all of the above. We put out a note a month ago telling clients, look, here's 4 compelling reasons to own gold. It's had a pretty good move since then. One of the things I would say that factors into it is you've got that period of seasonal strength in the summer as a tailwind for gold. If we're right that the second half of the year is going to be, and it's going to be a bit of a place to hide as well. So all of these are factors that contribute to our view, our constructive view on gold here.
Yeah, no, I mean, those are good points to be. So right now, we should be tightening up on our risk controls, which makes some sense. We've had a good run. Looking at the gold cycle where we are, being a bit more defensive, and outlook going forward. I know this is something that we've been talking about. I know that Tony Dar's been talking about. I know Martin Roberts has been talking about. You and I have been talking about for the past little bit. Is that this is probably the time to be pulling in our horns a little bit and just making sure that we're taking care of the downside as well as the upside. I mean, a 15% correction in the marketplace in the big scheme of things isn't such a big deal, but this is something we want to be aware for and make sure that we have some cash aside and some ability to have flexibility. So any sectors aside from those that we just talked about that you would highlight right now that we might want to be having a look at?
Definitely. So consumer staples should come into play as we rotate deeper into phase 3 and as we get beyond the market peak. And then looking forward, I'd be looking out into some of the more defensive areas of the market, namely utilities and healthcare. Now, one caveat I would put forth is that healthcare is not very broad here in Canada, so I'd be definitely looking more on the US side. I'd be looking at service providers, equipment manufacturers, and drug manufacturers on the healthcare side. So definitely the more defensive aspects of healthcare.
Yeah, no, I definitely can see some of that. Any thoughts on on bond yields and where the bond market's going to be going forward here from a technical point of view. We've had that long bull market in bonds, and at some point it does have to end, but it doesn't seem like it wants to end anytime soon.
No. So what we've highlighted here, just in terms of the bonds, they've had a pretty decent pullback here in line with yields going higher. So they are trying to form this bigger low over the last 2 months here, I would say. So I'm just specifically talking about the TLT here. Mm-hmm. To us, it's setting up for a major intermediate term price low. And the implication of that, from our perspective, is same as gold and same as the broader market. So that would make sense if we think that there's going to be some choppiness in the markets, because typically bonds are going to strengthen partially as a flight to safety. So we do see that in the second half of the year. So the fact that bonds are trying to find a floor and are firming up here makes total sense.
Awesome. Well, always great thoughts, great advice. We do follow what you're saying, and it always keeps us out of trouble. So, hey, why don't we leave it there? Join us again, in a few months. Looking forward to seeing you in person. Thanks very much, Javed.
Awesome. Thanks, Greg.
Hey, thanks, Ed. Bye.